Hello and welcome to the day ahead. It is Wednesday, June the 15th. I'm Andrew Gagan. Well, to the markets, and Wall Street was mixed overnight, with the S&P sliding for a fifth straight day, marking its longest losing streak since early January, and unable to bounce back from yesterday's bloodbath. The Dow also low, while the Nasdaq managed to eke out a small gain. Well, investors remain poised for a 75 basis point hike from the US Federal Reserve tomorrow local time, with Fed futures pricing in a near 100% chance of the move. Stocks, specifically FedEx shares, jumped more than 14% after increasing its quarterly dividend by more than 50%. Oracle also gained momentum after its quarterly results beat on both the top and bottom line, as demand for its cloud products continued to soar. However, the company warned of lower profits in the year ahead as a result of suspending services in Russia. The US dollar continues to strengthen ahead of tonight's Fed meeting, hitting a fresh new 20-year high. As a consequence, the Aussie dollar has weakened further, slipping initially to 68.5 US cents. It has since come back. In the latest reading on inflation in the US, producer prices increased solidly in May as the cost of gasoline surged. The producer price index rising 0.8% last month to take it to 10.8% year on year, with a 1.4% jump in the prices of goods driven by soaring energy costs. A closer look at the numbers reveals wholesale gasoline prices were up 8.4%, while jet fuel jumped a further 12% after rising almost 15% the previous month. Meanwhile, former Fed member William Dudley believes the Fed will hike by 75 basis points to deal with surging inflation, saying he doesn't see recession as an immediate consequence of aggressive rate rises. Those expectations have pushed US two-year Treasury yields to 3.44%, the highest since 2008, while the 10-year rose to 3.49%. That's the highest since 2011. And in the UK, May's unemployment rate rose to 3.8% from 3.7%, while annual wages growth increased to 4.2%. So the selling is expected to continue on the local share market this morning, ahead of the Fed's key decision on interest rates. SPI futures currently off around 0.7%. Heightened concerns about the global economic outlook weighed on oil prices overnight. Brent crude falling 1.7% despite ongoing tight supplies, and worries about China's growth and the demand for iron ore in the midst of further COVID outbreaks has seen the price of oil fall around 1%. Base metal prices were mostly lower, with tin down 5.5%. Spot gold continues to weaken, trading just above $1,800 an ounce. And Bitcoin has fallen for the 8th consecutive day, having lost around a third of its value over the past week to trade at a 30-month low. Well, ahead today on the data docket, Chinese retail spending, production and investment figures will be released as the country deals with further COVID outbreaks and lockdowns. And market focus will be turned to the People's Bank of China, which could cut the rate on its medium-term lending facility. And on the corporate watch list, the ACCC has launched its informal review of Woolworths' proposed acquisition of MyDeal.com, the Australian regulator inviting interested parties to make their submissions. Elsewhere, Queensland has launched a probe into Star Entertainment Group, investigating whether the casino operator can keep its gambling licence amid concerns of money laundering in the Sunshine State. If found unsuitable, it would likely ruin plans to open a $3.6 billion casino resort in Brisbane next year. And that is the day ahead. See you again tomorrow.